Okay, so welcome everybody at Guru Schools. We bring new things on the table. So one of the requests of many of you, can we discuss the domain? Okay, we discussed vendor interview questions and answers. We discussed LinkedIn makeover. We discussed end client questions and answers. We discussed interview debriefing sessions. So what we are trying to do, we are taking every client domain process. We will bring an expert for retail banking. We can bring expert for HNI banking. We can bring expert for term life insurance. We can bring a expert for whole life insurance. We will bring expert for car insurance, home insurance, real estate mortgage. Like this, we will keep bringing as many people as I can, whom I know. Needless to say, many of you would also know in your someone in your family, your spouse, your colleague, friend, brother, husband, wife, and you can reach out to me and we can have this session. Okay, we talk 4 times in a week: Tuesday and Thursday, 2 o'clock, 7 o'clock. What we will do selectively, once we know who is the expert and what he or she brings value, we will add them and they will join this session. The intent here is to gather the functional knowledge of that particular domain or of that particular topic subject, so that whatever you have written in your 3-page, 4-page resume, especially if you're a business analyst, if you're a product analyst, if you're a project manager, or if you show in your project that you have worked for an insurance client. So if you worked on an insurance client, whether you worked as a Salesforce admin or a BA or a QA or a reporting or anything for that matter, the first question they will say is, what was the project was all about? Huh? What was that insurance project was all about? And in that case, you could articulate this in further, that this project was on mortgage lending, retail mortgage lending, short-term mortgage lending, or term life insurance, or wholesale product, or real estate insurance, or life insurance, or home mortgage, or car loan management system, vehicle management system, and then you could articulate that in a 5 minute. So the whole concept is to have these such sessions so that many of you will get some idea. Okay, we will record such sessions so that we keep this repository at our end too. So for the benefit of the students, only for the students, because what we are trying to do, we are infusing and educating and spoon feeding these domains. So, and knowledge is very empowering, so that you will have a leg up on the competition, right? Otherwise, many of you will lose out to the competition. So the lateral people, those who have worked in that domain, there is a constant drawback which you will have for lack of client domain knowledge. And that's the gap we are looking to bridge by having these sessions. I request you, suggest you, if many of you have your spouse or someone in family member working in corporate America on different product line, different domain wise, you could also request them to give their time. If not 2 o'clock call, we can bring them evening 7 o'clock session, so they can spend half an hour. We will try to record it and then we will reuse that recording for the benefit of our domain knowledge and learning. Okay, that's pretty much what my overview is. Anil is a dear friend. He's basically based in New Jersey. Last 20 some years, he's into apparel domain. He worked as in for many apparel companies as a buyer, sourcer. That's where you see that beautiful hat. He's always dressed up sharp. And then after that, in apparel gig, which he did for Macy's and many other Abercrombie and few other companies, then he became a self-entrepreneur. He has few businesses, and as a friend, I have a pleasure of knowing him for a couple of years. He is into real estate lending, mortgage, as well as he's a real estate broker. Plus, he has a couple of insurance businesses too. Okay. So he's a busy guy, but I said, hey, this is what I need to do for my employees. And, can you please give them the knowledge, and they will see and understand that will help them to get a job. So he was kind enough to give his time out from his busy schedule. So he was in a bank, and I literally had to drag him from the bank to schedule this session. So thank you, Anil, for your time, first of all. And sir, it's all yours. अगले 30-40 minute में आप whatever ज्ञान you want to give, we are eager to hear. We will make it more interactive. So every 10 minutes, take a pause and see if there are any questions and answers. Thank you, sir.
Thank you, Dev. Thank you so much. And thank you, team of Guru Schools. I really appreciate you all coming and like giving your time. So I will try to do my best and I will try to give insight. So technically, before we proceed, let me brief, what made me go this path of financial education. And what I am sharing with you might be something you people must have seen, or maybe you might have gone through it, like maybe here and there. But I still feel there is a lot of information you will be like interested, and you will be like appreciate, that somehow you are getting it. So let me brief, like, I'm from India. Like I did my bachelor's in textiles, and then I did my master's in fashion from NIFT Delhi. And then thereafter, I was working for 10 years in leading brands as like different positions. And then finally in 2001, I came to USA. Like as everyone, I gone through H1 visa. I did my like L1, then H1, then green card, then citizenship and all that stuff. In entire journey of 30 years, I seen one thing, while I was leaning, I was climbing the ladder of corporate American ladder. Okay. I was going up, like I was walking like with the strong hands, like holding myself. And then like with a strong mind, strong education. But, there are many bottlenecks I hit in my life. Like in India, when I was working for big corporate brands, sometime I quit myself, but I was able to jump to a better position. Then I quit, I got to a better position. Then I quit, I got to a better position. So USA, as we all come with a dream of like, country of opportunity, and that where we learn, and especially this is something I think Dave is doing an excellent job, because the opportunity comes in with a lot of, educational drawbacks. Like, for example, we are basically trained in our home country how to work like as an employee. Okay. So the E is basically limited with the 24 hours. So the problem is, as a husband wife, we are like husband, and then we get a wife, and then we both are finally like highly educated, and we start a career of ours, like, holding hands together, and we have a platform. First thing first, we buy a car, like, beautiful car, and then we buy a house, like excellent house, and then we go and plan kids. That's where the mentorship comes in. And who is the person who is giving a mentorship to us? Most of us get a mentorship from our friends. First we chase for a job, we get a job, then we chase for H1, like to get into green card, and then citizenship. So more or less, most of people, like I'm a realtor now. After 30 years in 2017, I quit corporate American jobs. I became a real estate investor, and then I started flipping and all. So while I was walking a journey of like, I like almost like 30 years, I realized like a lot of us, the most we know is like how to buy a house and why we should buy a house. That's where our education ends. Then there is a lot of other educational parameter which I'm sharing today, and that basically will give you insight, because in this corporate ladder there are so many factors which you may not see now. Because what happened is, you are all by yourself walking. Let's say when people like they were like providing an opportunity for you to learn, but that opportunity is not many have, because we corporate go to the corporate job, but there's a boss. If he is somehow seeing you as a threat to his position, he might trip that ladder and you will go back to zero again. That happened to me when I was a global director of Aeropostale. Second time I climbed again, I got to a point, then I saw again, the market crash. So the second thing is that the crowd in the bottom is getting more educated. So there's a pressure. While you are walking down this ladder, you are building an empire of your like asset. You are having a house, you have a mortgage. So what is called, that's called DIME. Okay, let me clear this graph and I go back to DIME, DIME. So what is DIME? DIME is a debt. Like as we go this corporate ladder, we are climbing, we go here, let's say, right? So we have a house, like, this is a house we built, and that's a debt. We have a mortgage debt, okay? Then we have a E, income. So with that income, basically we carry on our expense. Income comes at expense. How? The minute we get an income, that's called gross income. there is something called federal tax, then there is a state tax, then there is a sale tax, then there is a property tax, so 40% is left. So most of us are basically working 40%, getting 40% of check for 40 years for working 40 hours a week. So bottom line is, if God forbid anything happen, you already have a like dying, there is already a mortgage, there is already a debt, there is already educational expense for kids. How are you going to cover all this? That's something is planning is missing. What if something, let me go back to the main slide. So instead of me drawing horribly, let me go back to the main slide, which I already have it. So let's go here, okay? So see this husband wife, both are like smart couple came, they both are diligently working, they created a platform, they have a beautiful car, beautiful house, 2 kids, but then that's a debt, right? Now that's something they're carrying on. God forbid if anything happened, let's say to him, how is she going to be able to handle all this? So second thing is same way, let's say something happened, or that, but both have it 24 hours. Now in 24 hours, like this person and this person, they both are giving 9 to 7, usually on average. Then there is a very few 2 hour, 3 hour window left when the kids and the family has to sit together, have dinner together. And that's the reason, you might get a call from India, someone saying, hey, you should sit together, have dinner together, you should go out together. But the point is, there is someone sitting who is deciding your time. Basically, he's telling you when, why, where you can go and take a vacation. So you might be under pressure, she's under pressure. Then the kids need time. They have they don't made any mistake. So that when you're doing, it's very important, both husband and wife are bonded. They should understand, because the inflation is something which is like kicking in. So inflation, this is going every day up. Risk of, there are so many risks while we're going. So while you are walking the journey, you are going through the inflation, which is every day rising. Now, let's say you are able to pay off your debt, you reach to the age of 60, then the taxes and the health comes in. So what if, you have a solution where you are able to provide independence, financial independence, where you get health coverage, you are able to take off your taxes, you are able to provide protection when you need it from 30 all the way to 60. And then, you are able to control inflation. So knowing this scenario, the companies came up with something called insurance, right? We all do know what is insurance. So that was basically the domain we are talking today. Like, what is insurance? And then what is life insurance? So life insurance technically, usually, giving a protection to individual like this guy or this guy. So ultimately, if anything happened, all this basically the dime is covered. So basically, the very first parameter of a insuring anyone is the good insurance agent. They have to know the dime, like what is the debt, what is the income, what is the mortgage, what is the income, all this total. Let's say there is a car, there is a house, $500,000 house, kids education $250, so total $1 million is a dime. Okay, so $1 million kind of a life insurance you need to protect you today for tomorrow. Now they've said, Anil, let's talk about kind of insurance. Let me share something. So most of us, right, when we come here, we know that job, okay, as an employee, we get a job insurance, okay. So job insurance is technically, it's called a group insurance. No medical and all the group basically gets insurance. And if we quit the job, we get a COBRA. So basically in that, they tell us you have 30 days to get insurance. Otherwise you have to get your own insurance. That's a medical. But life insurance is something, most of the employers give. The problem sometimes this in life insurance is, every day we get the health of us is going down. So God forbid if you are working here, but next day, let's say after 30, all the way to 50. In 50 age, if you don't want to retire, that time if you go out and get insurance, the health is too high, the cost of the insurance is too much. Okay. Second thing is, most of us, we get a term insurance. So what is term insurance? Term insurance has a cap of years. So usually companies give 10 years, 20 years, 30 years. Nowadays, some companies have started giving 40 years. Why they started giving 40 years? Because as per Time magazine, the people life expectancy has increased to 85, right? So earlier it was 75. So kids who are born in 90s, now they are saying they might cross 100. So companies are not losing money. If someone is buying insurance of a term from 30, they are insured till 70. How many people the probability of probability mathematics? There are people like geeks sitting, right? People like us, they are sitting, they are having a big data, okay, Hadoop data. So they have that database, and based on the database of entire US and Canada, they figure out, how many people probability of masses. So almost very less. That was the term is a very lucrative proposition for insurance companies because it's a free income, because you keep paying every month, but ultimately most of people will be passing 70 years. And then there's a technology now called pacemaker, all that stuff. So if anyone has any trouble, they can easily install a pacemaker and they can bypass 70. And then after 70, what will happen? That's where the issue is. So today we are trying to figure out two things: importance of insurance, which we talked in the last slide, and also at the same time, we are also talking about how to protect our taxes, how to protect our inflation, how to protect our health. Okay. So all these are the variables where people go out and do what? How to get the college education. So what most of us we do for college education, we go and do 529. For health, we do our health insurance, long-term insurance. For taxes, we do 401k, Roth. Okay, and then for life insurance, we do term, right? So that's what most of the people, they do, and do these 4 or 5 packages. So now something which I will be sharing is revolutionary, which came back in 1997. So most of you who are actually becoming who are part of this session now, and that's what we actually they've also get motivated and excited. Because in 1997, the insurance companies came up with a very unique, revolutionary product, which is called IUL. IUL is like a one Swiss knife, which provide you everything in a one combo product. That's it. How that happens? Now, if all of you, it's not like something we are asking you, but if you know this product, you can not only change your life, you can make your wife happy, you can make your life happy, you can even make your friends and families to know more about it. Because with every product, this is a new product, correct? It's like a Swiss knife, or I will say, I usually call it like an iPhone or Android phone, right? So old policies, like, they only were providing protection. There were companies doing whole life, but that's something separately I can talk about it, difference between whole life and IUL. But for that, let me go back to my second slide. Okay, so let me share my second slide and let's see what we are having here. Okay, so I go back to my slide. So you know about this, right? So goal is to get a financial independence. But before I go far, let me go to the slide 2. Now, most of us, we don't invest because we see, there is something coming up. We all know about this. We all gone through this. But if you see this chart, I have the slides without my notes on it. You will see every year there was something or other. So what if we know? What if we have a family? What if we are in this year, 1961, born in 1961, and we never invested any money because we were going, oh, there is something happening. We never invested, and we go to this year. What if in 40 years, what if something happened? A lot of people, they invest in a 401k. I don't know if you know, but I'm just sharing in a 401k just a little bit. What is 401k? 401k is basically tax deferred plan. A lot of people, I'm still getting surprised. A lot of people don't know. Tax deferred means, let's say you make this much of money, you take out this money, you put it in a 401k. Okay, this money you pay tax when it becomes this huge pile at 59.5 or onward. So you keep paying money, this one, based on capacity. Sometimes companies match it, maximum 3%. So when I'm not saying you should not, but 401k is something where you park your money. Right now, I think it's $19,000 every year. So you park that money every year, and that money is growing tax free. But when you take it out at the age of 59.5 and onwards till 72, this is the time you have to take out your money. Okay, you have to pay tax. Now, knowing the economy of the market, knowing the market right now, what if the taxes by the time you are taking out are too high? Okay, what if the taxes that time are like 75% or maybe 80% or maybe 93%? Is it possible? Well, let me not debate on it, but I will share one slide, or if you guys are free, you can Google, because in 1921, okay, 1921, exactly, almost like 1922 actually, sorry, because we are in 1922, 100 years ago, the taxes in the US was 76%. So that's the reason. So basically, the tax product which we have, 401k, is something where most of us put our money. So I'm just giving you a brief about the 401k product. Now let me go back to here. So this is about the market scenario. Okay, so we have to be intelligent, we have to be smart. We now know there is a market crisis. Second thing is about investments. Now most of us, when we come to USA, the USA banks are giving 1% or less. There is someone we all know called Albert Einstein. Albert Einstein actually created 2 formulas. Now, one formula we all know is equal to MC square. Now, but there is the other formula called rule of 72. I don't know why they don't teach in a school. I think it should be taught to every kid. Rule of 72 says divide 72 by the interest rate to estimate the number of years it will take your money to double. So this rule of 72 can work in your reverse also. If you are taking a money and you have a debt, that could go in your reverse. Let's say student debt, you have a money you have to pay back. So the interest you have to pay back will decide how many years it will double. So most of us, we put money in 4 products, okay? So one is a bank. So bank giving 1%, that means 72 years money will take to double. So now inflation is almost 5, 6, maybe some say 7 or some say 11, but let's say 5%, right? So same money, if you park somewhere like in 12%, same $10,000, if someone is parking at the age of 29, he will make whopping $640,000 if they get 12%. Now, most of us say where we can get 12%. Well, guess what? Insurance companies designed a product, as I said, IUL, where your interest fluctuates from this to this. I will go back on that part later, but I'm just sharing you something while we're debating about the market scenario as the educational tip. So first thing first, every person as a human or a kid must know the power of compound interest. Rule of 72 is very powerful. Unfortunately, when you go to a bank, the bank teller or someone who's trying to give you financial advice, if you ask them, sir, do you know rule of 72? That's basically a bonus. This seminar alone is like, worth of attending, because the rule of 72 is something very powerful. If you know this is also is like a jackpot for you guys, because that alone can help you decide and teach your kids like how to start compound interest. Now let's go back to third slide. Now in this slide you see the market is in a red line. Okay, I'm sorry for all these write-ups which I do, but next time I'll be more like having a neat slide. So this slide, okay, so this red line is basically the market. The way the stock market is moving up and down. So most of us, when we invest money, first thing we already discussed was a bank where we get 1% in US. But second thing is we put money in a stock market. Now, stock market, as we all know, stock market, we have to pay taxes, correct? On top of it, when the market goes down, we lose money, and then we have to get back double of what we lost to go back to the same number. So unfortunately, because as we put in the stock market, if we are in a wrong time or we are not able to take out money, like last year, a couple of days, the market you can see is going up and down. So insurance companies added this third component into this, where they're giving a floor. Okay, this again is a very good benefit of a IUL. So IUL basically has two things. One is a cap of 10%. Some companies give 12%. It depends on companies to companies, but the second thing is the floor, which is very powerful. Floor is 0. So 0 means no matter where the market goes, your money will get locked at 0. You get it? So now if you are like working diligently, you are maybe someone, let's say doing a Uber, or someone like going out and driving up and down, they may not have a time to watch stock market. So if your money is going in a IUL product index where the money is linked and the money is getting locked at 0, so you're not losing money. So if someone taking out money at this time and this time, you are having this much of advantage. Someone taking money here, you're having this much of advantage. You see that? So technically, this is the power of a IUL. Now let's go back to the fourth product. Remember in this slide, I talked about like medical health. So we already discussed about, risk inflation part. Now let's go back to health. This one. Okay, let me. Sorry. Okay, so the problem in this one is like accelerated living benefits. Most of us, when we protect ourselves, we protect we know one thing in term insurance or in life insurance is that we get our peers, our beneficiary will get money if something happened to us, right? Life insurance. Like that's something like usually people think like, life insurance is only beneficial when you have to die. But now it's a before life. Before life, how is that possible? I go back. So basically, as we discussed, when you are walking down the line and your health is going up. So let's say at the age of 65, most of us, if you Google, the Google says every third person, let me repeat, will be leading in long-term care, okay? And this is about females. Every second male will be needing a long-term care. Now let's go back and see what is the long-term care expense, okay? So long-term care expense is technically, like nursing home expense, nursing home private, nursing home assisted living, nursing home adult care. All these are expense. So at the age of like 65 or somehow, so a lot of people think, Medicare will pay, but unfortunately, Medicare only pays for 100 days. Medicare pays 100 days. After that, it's a zero for long-term care. Okay. Some people had a Medicaid, they pay 20%, but even 20% has to go from your pocket. So this insurance company, the IUL product, covers this, all of this is covered. Too good to be true. Let's go back to the phase 4. Okay. So let me have this slide. Look at this. Let me open my clean slide. We know this is very important. Okay, because this slide is very important. Let me open the slide. Okay, hold on. So this slide, okay. So now in this slide, you see, most of us know about tax now. Okay, tax now means like we put our money in our bank. So the day we take out, we get the tax same day. Okay, same year. Okay, and this is included as a part of a estate. What is the estate? If unfortunately the person who is holding the money in the banks or somewhere, if he dies, then the money will be taxed, and there is this estate tax also we have to pay. 401k, most of us know. IRAs, we know. 403b, some people don't know. 403b is usually for people like medical workers and all. That is similar to 401k. So, but in 401k, we put money before tax dollars. IRS 10% penalty if you withdraw money before 15.5. So let's say someone needed money. If it's an emergency, fine, you have to write a letter or something, but otherwise you have to pay a penalty of 10%. Growth and principal are all taxed at distribution. That's very important. When you take out money in 401k, it's very taxed at the distribution. Contribution has limits. 401k maximum contribution limits, as I know, is 19. Withdrawal of 44,000 cause 85% of your social security to be taxed. That's called provisional tax. That's another bonus, just because you guys are attending this. Provisional tax is technically at the age of 65 when we're getting a social security. A lot of us think we're going to get social security, but if you're making income more than 44,000, okay, and if you take out, let's say 401k, you take out 44,000 or more, your social security will be taxed 85. I think it's now 88, but let's say 85. RMD is at 72. What is RMD? RMD is technically the IRS will force you to withdraw your 401k at the age of 72. Otherwise, you will pay 50% of the excise tax if RMDs are not taken. Okay. Now, and then this is included in your estate tax. So as I said, if the person holding 401k, if he dies, the whatever income you have, it becomes taxable in the estate tax. So you are now getting double tax. Not only you paying tax at the withdrawal, you are also getting hit. And one more thing, I will leave it to you guys, like do the Google and see what is the inflation rate going on, or Google and see what is the dollar value. If someone is putting $1 today at the age of 72, let's say 70, someone has a $1, okay? All the dollar became in 2020 is 16 cents, okay? So you lost that $1 to 16 cents. Now all of us who are putting $1 in 401k, in 40, 90, like he put 90, 70, and they are 401k, like, 90, 70, and they want to take it out in 2020. And that money will be not only taxed, but you will be also losing because of the inflation. So inflation and taxes, the very first slide we talked about, and health. That's are the three variables we a lot of us miss, Now let's go back to the slides again. So let's say, okay, so now what is the IUL? IUL product which created by the insurance company. In this you put after tax dollars. So it's kind of similar to Roth. Okay, Roth is something which is a replica of 401k IRS product, but in Roth you put after tax dollars. Same way in life insurance. Second thing, there is no IRS 10% penalty for withdrawals prior to age 49, because this product uniquely is designed by insurance companies. So technically you're putting money in insurance. So there is no penalty on it. Let's say in 401k, you have to pay penalty. In Roth also, you have to pay penalty. So if you have money in a Roth, you cannot take out unless you want to pay 10%. Growth is 100% tax-free. This is very good, very important. How come that possible? Because insurance is always tax-free, whatever, no contribution limit. Contribution limit, you see number 2, there is a catch here. So contribution is decided by the IRS. So every IUL policy, when you design, so it has to be designed very perfectly by the good agents, because the contribution has a cap based on the policy. Let's say in a nutshell, if someone is 40 and he's buying a policy of $250,000, so IRS will decide the maximum he can put. If usually based on a good perfect health, let's say the IRS will tell him like you can put maximum $10,000 per year. Otherwise, if you put any cent more, then it becomes taxable. So that's the contribution limit, but otherwise there is no limit. Like Roth has a maximum limit of 6,000. Here you can go and increase it based on the policy you take. Withdrawals do not cause Social Security to be taxed. This is very good. No RMDs, does not count toward your financial aid. This is very good. No, what happens is, if you are putting money in anywhere else, let's say 529 package, and 529 is another educational tool. Whatever money you put in 529, you only can put it and use it for education. You cannot use it for anything else unless you are ready to pay penalty. 529, usually parents take it for their kids as an educational fund. But what happens, most of us, we don't know and we don't realize it, and we just start putting money because someone told us to put it, that money is declared. It's shown in your books. So what happens if your kid is very sharp and smart, you want a scholarship, let's say you want a scholarship or something for him, so that you won't be able to hide it because the money is shown. So your chances of getting a FAFSA funding for your kid's scholarship may be in question. Okay, but in IRS, in this IUL product, if you put money, since as I said, you can withdraw anytime and it's tax free, so you can use the same for your college fund. It's not included in the state, so that's very thick. So if the person who's holding this insurance, if he dies, then whatever money you have, the beneficiaries get tax free, and that's not as a part of a estate. So there is no estate tax on top of it, and then it's all 100% tax free. So IUL is, as I said, is a revolutionary product, and this is something a replica which is created by the insurance companies. So there are 3 insurance right now. So let me go back to the insurance, because the domain which they wanted me to share was term, whole life, and IUL. Okay, in whole life there are something called variable. So term is technically, as we said, there's a time. Okay, time, it could be 30, 20, 30, 15, or 40. Okay, limit. Okay, and then the premiums are fixed. Okay, PREMIUM, premium is a constant. So premium are constant. So you pay, and after lapse, okay, after time duration, they get 0. Whole life, they go with the life of the person. Okay, whole life, as the name said, but the premiums are fixed. Now, what happens in whole life? You get 4% guaranteed. Let's say there are companies like New York Life and all, they give whole life guaranteed 4%. But then there is a 2% withdrawal. When you take a withdrawal, you have to pay 2%. Okay. So in the whole life policy, if you are making 4%, you have a withdrawal of 2%. So if you take a loan, you have to pay 2%. The third factor in the problem is death benefit. So in the death benefit, it's fixed. Okay. In whole life also, the death benefit is fixed. Okay. The cash factor. Okay. Cash value. So cash value in term, there is no cash value. Okay. This policy, you pay, you lose it, you lose it. If you stop paying your premium, you get 0, nothing. In whole life, if you stop paying your premium, whatever cash value you have, you can take it out, but you have to pay 2%. Or you cancel the policy, then you can take it out, but you have to pay tax on it, because cash value is not part of death. They both are separate. Okay. That's called a kind of an income. IUL somehow is a product where death benefit is grows. Grows means as basically death benefit plus cash value is added. So total death benefit. So that's the reason when the person who's growing, when they are putting money and then going like this, so the money inflation part is beaten up. As the inflation is going up, your value of that total death benefit is growing. Cash value is added to the death benefit. So because it's added to the death benefit, the cash value and death total will become tax free. Because as I said, death insurance is tax free. So because being a tax free, so you can take money loan. This is loan, right? 0, because the floor is 0. It might get technical. I can go back and do one more session on this, but for you have to understand there are 2 factors. One is the floor, which is 0, and then there is a cap, which is 10%. So your money is technically growing between 0 and 10. Like your market goes 10, you get 10. Market goes 12, you still get 10. Market goes negative, you get 0. Okay, that's what. So the maximum you will get 10 every year, and every month. You can do monthly or yearly, and the floor is 0. If the market go down, you never lose money. Because the floor is 0, you can take out a loan on a 0. So now same money, which is total death benefit growing in value, it's tax free. You can take out a loan on 0. So that's the beauty of this. And then the second thing is it also goes whole life, and the premiums are flexible. You have 2 options. You can do target, or you can do guideline. Guideline is mandated by IRS. IRS tell you how much guideline means, how much maximum you can put. Target is decided by insurance company, how much minimum you can put. Okay. So these two numbers are very important. Guideline is IRS, target is minimum. So target, and then this pulse is never lapse, because unless you're, you stop paying premium and you're ultimately not paying, because everything has to be, the premium has to be overfunded, usually with the guideline. Okay. So now this part I covered. Let me cover variable, because variable I just wrote. Variable is technically the money is directly linked to the stock market. If the stock market going up and down, your insurance policy is also going up and down. So in 2002, 2006, 2020, when the market crashed, so anyone who has put money in a variable market, they will lose value. So that's the problem variable product has, because there is no floor. Like IUL policies have a floor. So that's the IUL is a magical product, because there is no loss. So if someone who coming from, let's say, overseas making a home, so at least he's not worried about his family or anyone. So that's it. Okay. Now, so in a nutshell, this is what I will make. I'm not very good in trying, even though I did fashion. I don't know what happened, but I'm trying my best. So growth. For you, I will use it like for anyone who is in New Jersey Garden State Parkway. Okay. That's how you're going to remember this. So if you are, so growth is technically you're getting, growth is how much? 10%, because there is a cap of 10%. Garden State. Okay. There is a call. What is called safety. How's you getting a safety? Because the floor is 0. So money is locked like bank. So like bank, you have a money is, you never lose money. Growth is like stock. So now instead of putting money where I usually suggest everyone to do diversify their funds. But if you are making $100, after keeping, Uncle Sam is taking his part right away, federal tax, state tax, sales tax, property tax, he's leaving you 40%. After the 40%, leave 10% liquidity, 10% stock, 10% for your, future, which I will put in IUL. And then that 10%, if you were like me, want to do crypto, do 5% crypto, and 5% you can do investment property, because you can buy first home at 5% down. Okay. As I said, real estate. Real estate is the second chapter I can do separately. But that if you decide, I guarantee you in 25 years, you will make million. I did that. I can show you. Anyway, so Garden State Parkway, you get growth of 10%, you get a safety of 0, and the protection is a life insurance protection, as I said. And the last thing, very important, tax-free. So now 4 things in one product. And another good thing, chronic critical terminal is covered. Means you are whatever accumulated value, death benefit plus a cash value is equal to total death benefit, right? So total death benefit of that is chronic critical terminal is covered. So God forbid anything happen, you get sick, you can't bath, you can't sleep, you need assistance, that money is covered. Second thing is college planning. You can take out money for your college kids, because this money is liquid. You can take it out. It's 0 because the floor is 0. Wash. It's called wash off rate, because when the rate floor is 0 and you take out the money, it's called wash off rate. Okay. So this is 0. Okay. College planning. Another thing, liquidity, as I told you already, you have the very important part, very, very important. Protection from the law. Why? Because these are non-declared funds. Non-declared fund mean if God forbid, if there is an IRS lawsuit, let's say doctors, the doctors get a lot of lawsuits. So if they get a lawsuit, this money here is protected. Okay. Divorce. If someone has a, unfortunately, like kids get infatuated, they marry and tomorrow they decide, you know what, oh, it's not for me. They part the money. Parents saved every penny for the kids, and kids decide, unfortunately, later, parents lose 50% of the property, right? But if you are putting in this money here, this is non-declared. You cannot part anything. So this is very important, non-declared. Okay, now any questions anyone has? I think I was like speeding myself, and there's a lot many other slides. I think I will stop here. I don't want to go too far. I'm just showing you this, disability income you make, retirement income you make, as I said, life insurance you get, and excess living benefit, like chronic critical terminal illness riders, all this part of the IUL. Any questions?
What Anil is thoda zyada bouncer ho gaya. So this is like, Anil, can you hear me?
Yes, sir.
What I'm saying is this is really like a bullet train catching up. Many of these people, including me, watching it for the first time, can be a little more fast.
Hello?
Can you hear me, sir?
Yeah, I can hear you.
Yeah. So what we will do is, you can continue another 15-20 minutes. We'll try to capture these things. Okay. Anyway, I'm recording these things, so the students will watch it 1 time, 2 time, 5 time, 10 time. What do we do, sir? We meet twice a week.
every Tuesday, every Thursday. So once we record this session, my students will go through that video 1, 2, 3, 4 times. Guys, if you have any of your siblings or family working in IT or insurance, maybe they would not take their help also. Then they will come with their observation, their question, because the intent is that, you know, if they have a resume which shows insurance, you know, they can talk about this. We have worked on a requirement gathering for IUL product, or the system migration from the term life product to IUL product, and I gathered requirement. So they can, once they understand this, they can narrate that in a 2-minute, 5-minute conversation while having an interview with the client. That's the whole intent. So once they go through this exercise, they will get it, right? I'm sure, fundamentally speaking, most of us, I guess, will have at least term life. Some of will have, many of us will have a 401k or IRA, children 529. So have it, but in a haphazard way. So let them, will continue another 15-20 minutes. Let them deep dive in as a revision 1, 2, 3, 5 times. And then maybe Tuesday's session, I'll check with your availability. If not Tuesday, then Thursday. Again, you can come up, and then they may or they will ask questions, because every Tuesday, Thursday, sir, we meet and we discuss. Is that okay with you, Anil?
Yeah, I'm totally fine. And Dave, thank you so much, because, you know, sharing is caring, I learned. And unfortunately, when I came to this country, believe me or not, I might be, and I do want, I might be, and I should be, because I don't want anyone to have to go through the like hassles up and down, like which I've gone through. Technically, I've been through every situation. So I did eBay, I did my online stores, I had a showroom in Texas, I had like worked in clothing, I had my own IT company. So you asked me, I did it. Now I've learned the only thing which I should have done was financial education, because money is in a money business. Unfortunately, schools don't even teach us about rule of 72. How cool is that? Like how difficult that is, you know? Albert Einstein, it's not like I created or someone else created. Albert Einstein, everyone knows. They all talk about E is equal to MC square. They all talk about him like as a genius, but what about the very simple formula, you know? So with that being said, I personally think it's very informative, and, you know, education should prevail. And unfortunately, we all try to bring our knowledge, body, mind, you know, beauty, and like ethics, like personal family values, all that we give for what? Trade money for dollar. And then we give away freely, easily, every year, month after month to federal, state, sales, all that stuff, without realizing that the family which we are leaving behind at home is looking for us, and they are seeking an answer from us, you know, that the answer has to be right. And most of us, we shut our mind because we follow as if like they have a destination. But unfortunately, if you want to follow the leaders, follow the someone who has achieved it. And for that, you have to have an open, coachable mind. With that, I'm done. Thank you so much, Debhai, and I'm really helpful and really happy that, you know, this is
do you want to complete another 15 minutes also? Do you have any other slides? 15 minutes aap chalaoge? 15 minutes?
Yes, I have one actually, but I will rather prefer if kids have, you know, if the students have any
let's
questions.
take a pause. Yeah.
Anyone has any question, because then it will become more informative, you know.
Understood.
Because I want them to have a question, so I can at least give an idea about, like, you know, what kind, but because some have a question, some might be.
Sir, number one, samajhna bhi to chahiye na. So much knowledge came on to us, so we need to understand.
Chota karke pucho, chota karke, you know, anything which anyone is looking, like, ask me question, like, you know, if you don't know what is Roth, I have a slides I can share about slides, you know, anything you have.
Anil, I have a question.
Mm-hmm.
Anil, I have a question. This is Shama
Okay.
Dayananda. A
Hi.
question is, hi Anil, it's a great presentation, by the way. I really
Thank you.
appreciate it. I appreciate you and Dave, sir, for this opportunity.
Thank you.
As I understand, Anil, I don't think employer offers IUL, right? Indexed Universal Life Insurance. So who do you recommend outside that one can opt for IUL?
It's a very good question. Actually, I'm glad you asked me that question, because what's happening is there are 51 companies right now on internet, you know, who are offering this product. Some of the companies are basically renaming the old product, which other companies have already perfected. But personally, if you ask me, you know, I myself have multiple policies, and I'm just sharing something which might give a better idea, because, you know, this is what I did. Okay. I did job. Okay. I bought a house. Now, when I bought a house, I had a life insurance whole life. Okay. Now, when I lost my job, when my job gone, I had a house, I have to pay mortgage. So I was thinking how to get that mortgage paid. So I called my whole life company. Can you give me some cash on this policy? And then they said, well, you know what, if you want a cash, you have to pay 2% interest. So I was thinking, you know, if I have to pay 2% interest, why not I take a HELOC, like loan on my property, which I already have. But that time, the money I took out from a mortgage, from my whole life, I have to pay back that money. But that time I started looking and I realized there is something called IUL. The IUL product with the zero loan made it too good to be true. Now, guess what? I take out 100K from a IUL. I have a AIG. Okay. So that's the answer, because AIG is a 100-year-old company and they everything is black and white. And I have a life insurance license. The reason I took a life insurance license, because by law, you cannot talk about real estate, you cannot talk about insurance without you have a license. So a lot of the bankers, okay, a lot of my financial advisors, even my CPA, they don't have insurance license. So even if they know about IUL, they can't talk about it. So unfortunately, when I go to Bank of America, not to put anything down, let's say if I go to any bank, if I say, do you have a life insurance license? They don't have it, they can't talk about it. Like all the people are sitting in the Wall Street, big buildings, they have a Series 5, Series 6, Series 7 license. All these licenses allow them, they're very expensive license. It's a lot of, it's like a doctor, okay, PhD in finance. I don't know what they learn, but I'm guessing they must be learning something good. But whatever they learn, I don't think they can give me a product like IUL where I'm not losing my money. I'm getting it 10%. I'm getting my health insurance. I'm getting my medical insurance. I can take out my money, and I took out 100K to do flips. Can you believe it? I took 100K with zero interest to do my flip, and I'm replicating that money and putting it back. How cool is that?
Flip as in buying a property and then
Yes. So what I do, let's say I have a home, right? I take there are two options a lot of us know. One is a HELOC, means you take a loan like a second mortgage on your home, correct? So second loan, usually, let's say the primary home you have, you pay 3%. If you take a second mortgage, you will pay 6% or something, okay? That money is like a cash credit. You can use it anywhere. Some people buy it, do like in a second home, or maybe rental, or maybe like a vacation home or something like some people spend money as a travel, and they whatever they decide. Okay, so now in this money, when you take out a second mortgage, you have to pay interest. That money, when you take out, you flip. If you made money, you have to pay back. Otherwise, the bank will put a lien on your property. Okay, second mortgage. Okay, but in my case, when I have a property, since I lost my job, you cannot get a HELOC. Companies don't give you loan, even if you have a property with a lot of equity, because if they see you have no job, they don't give you loan. So even though my property has a lot of equity, right? My home has like 200, you know, they were asking me, how you going to pay, all that stuff. So it was really difficult. So that's why I became a realtor, because I said, you know what, I'm not getting an answer. Let me educate myself. In 2017, since I was looking anyway, I became a realtor and I educated myself. When I started getting educated, this product came as a blessing. Well, let me see. So this product gave me three options. One is you pay target premium. You pay single guideline premium, like one premium. Okay, you pay guideline premium. So IUL, when I took, I said, wait a minute, target is the minimum I will pay month per month, and that will go 10%, 0 to 10. Okay, 0 to 10 money is growing. So they usually make a policy with 6.5% as a law called AG 49. But with this 6.5, they projected. So I was like, okay, fine, 6.5 is not bad. You know, it's like I'm making money in India, because in India, 6% to me is good. But in USA, this is the first time someone told me you can get 6.5. So I said, okay, fine. But I put single guideline. I had a money sitting somewhere. I took out the money. I put it in my IUL. Now, when I was ready, I started in 2019. I took out the same money. And because a cash loan at a zero interest to do my flips. I still have a life insurance. I still have a medical insurance. If anything happened to me, my wife is happy because she's getting money, millions. If nothing happened, but if I, let's say, you know, hit someone and they get into fight and have a broken teeth or something, I don't think broken teeth will be fixed. But anyway, let's say if I need a hospital expenses, they will pay it. Okay. And the last thing, I'm using money to do my flips. So it's a security. So I'm like a banker. Okay, let me share something. Okay, it might go to let's say I have a house. Okay, I want to flip. So what I do, I take a cash from my IUL. I give it to my company, LLC, and I charge my LLC 15%. So I'm taking cash as 0%. I charge my company 15%. I do flip. I show that 15% my income because it's my LLC, right? And when I do the flip, the difference of the income I made, I show that as expense because 10 and like this is, I call it Trump formula. That's the second thing we can do. You know, that's called tax saving thing. We can talk about it in the second seminar, but I call it Trump. Like Trump and like Trump, someone asked me, Trump, Hillary asked him once, how come you don't pay any tax? He said, because I am smart. I know how to manage money. I don't break law. I use law to help me. Similar thing I started using. So first thing was, I started doing this by using IUL. Now in IUL, every money I make is tax-free. So at least I'm happy if tomorrow, if God forbid anything happened to me, my family will get the number they see. There won't be any cut. No state tax, no property tax, no state tax. You get it? But to your question, I use IAIG policy and my kids have a FNG policy. Fidelity and gold.
Thanks, Anil.
Because
Thank
I have
you.
2 kids, one is a girl. So girls usually, you know, as an Indian parent, we want to give gold to the girl as a gift. So instead of me and my wife buying gold tomorrow, if we have to run away to India, how are we going to carry the gold, you know? So I use FNG policy because FNG policy allow you to use a gold index to park money in a gold. So technically, indirectly, I'm giving her a gold. And if tomorrow, God forbid, anything happen, let's say she don't like someone, she get infatuated, there's a DIVORCE, the money will stay with us, with her. She don't need to part with her ex-spouse, you know, and that she can use it as a gold, as an emergency fund, you know.
Okay,
Any
good.
question?
I personally just wanted to share my experience with Anil. So number one, Anil, thank you for the presentation. It's a great presentation.
You're welcome, Debbai. And I really feel so happy, and people, you know, we should support people like Dev. You know, people like Dev or even me, we have something called, you know, we just go and we have something called There You Are. There you are, okay? So when I came from India, I had here I am, here I am. That's how I came from India. I had a big nose, like nose, you know, like nose. So I used to keep a distance. Anyone coming to me, they have to be, I was so nosy, you know. So now I cut down my nose and I go to people. And once I did that, people started coming to me. They buy, yes.
Yes. So Anil, because of New Jersey, I've known him. I know some of his life. It's a roller coaster, okay? In terms of married life, in terms of his apparel business, in terms of his some other businesses. He made money, but at the same time, he lost it all also. So what I liked about him is, you know, he's trying. So last 4 or 5 years, he found the mojo. He found that magic bullet, what it is. So he, Chandra and all, they were behind me. Devji, you know, 4,000 or 5,000 people you have trained and placed last 20 some years. I mean, what you're doing is a noble thing when it comes to financial literacy and when it comes to giving career. What we are doing is also financial literacy. So I was talking to him. So first thing is I said, hey, you know what? Have 2-3 sessions with my students, because number one, we all have a mortgage domain experience or an insurance domain experience or a real estate domain experience or a banking domain experience. So when you share this experience, number one, it's a lot of learning. Okay. And by the way, we have some real estate professionals also learning business analysis, because business analyst is a requirement gathering. And while talking to me, you know, it was, I thought I know it all, but it was humbling that I also don't know it all, because even I have a couple of old IRAs of my 20-some-year-old companies, which I never looked in. And then he said, why don't you do some exercise and collectively tell me how much is your captive fund in your old IRAs and all that. I'm like, well, wo paisa hai invested in some equities, you know, that's been staying there in some ETFs or some mutual funds. And he said, well, I'll give you a trick. Depending upon how big is your pool is, just for moving from place A to place B, you can make a 6-figure, right? So, and that's what I was like, oh, really? So we had a 30-year, same thing, 30-year term, which is expiring in another 7-8 years. me or my spouse. So he said, hey, what's going to get out of 30-year term policy expiring? Nothing. How about you further extending it or converting into product? And then by doing so, you're going to get this. So that was a good learning, because I thought that, okay, it's going to end. And that's about it. So I learned something new. Second thing is the old IRA, Roth or 401k, which I had, which was idle money just in some accounts where I used to see the annual reports. Now I consolidated that money and I put it in this one of their AIG fund. And for transferring that money, they gave me, I think I need what, 12% or 13% bonus. So basically, for every 100,000, I earned 13,000. So if for every million, I earn 130,000. Meaning, if you move, say, if you switch a bank, sometimes we get, right? You come, Chase Bank will say, come bank for us. If you give this deposit, if you do this, we will give you $100, $150. Something similar, they did that. Of course, as in business, I had good chunk of money. So suddenly I see $250,000 plus I got just for moving money. And now that money, then I bought term life product. And then he said, hey, why don't you buy an insurance product? And then I realized that these guys, insurance agents, for writing the term life full product and all, their incentives for the first year, the commission which they make is crazy, 80%, 100%. Then he is a friend of mine, so he had that guilt. He said, Devbhai, I'm sorry to say, but I will be making this 80%, 78% to be precise, money on you. How about I make you just a test lilo up and you write your own policy, I'll spoon feed you. You don't have to do anything, meaning you self-insure yourself. So that 78% premium aapka aur bhabhi ka, meaning my wife ka jo hai, that you will get it. So it was very kind that way. So otherwise, if I've got to some agent, that agent would have, because so many people call me insurance and I knew they make some decent money, otherwise they wouldn't be calling. But I never realized they make like 80%, 100% crazy money. Meaning if your premium is 30 grand a year, they get 30 grand first year premium. Crazy. And then 2-3% every year they get for remaining 10 whatever plus years. So, because anyway, I spend a lot of money, okay, million plus in training business. So that has also helped me. Of course, my previous savings helped me, but this extra cash flow, now we are investing in more people. We are investing, this Orvin tool we invested in. So all that kind of helped us towards dropping a few pennies in some of our business and making it more prudent and efficient. Financial literacy is very empowering for me personally, as well as for all of us. And there is always something which we can learn, right? So if I'm sitting in a room where I'm the only smartest person, it's a wrong room for me. So when I see people like Anil, because they have so much businesses which is learning for me, especially real estate flips and using iski topi uske sir. I often jokingly say ki aap topi ghumate rehte ho. He writes himself, he writes his own expenses. That's what he called it, the Trump policy of real estate. So basically all income can be written off as an expense. And you can drive a new car every year, every second year, you can spend it and all, and real estate you can build as your guest house and all. So humbly, I have started learning myself at this age also. And he has so much depth of knowledge that I said, at least this couple of hundred people whom we train and teach every year, can we capsule this knowledge? And then we read it. It's like a holy book. We read it 1 time, 2 time, 10 time, 20 time, because that will go a long way towards preparing them for their interview. Now, one is for their career. Second, for some of them may start scratching depending upon what age group they are on and if whether they have if you don't have a policy, it's a brand new, like someone like Milan Taral, you're a 20-some-year-old kiddo. So, maybe you may not see a value, but someone like us have a family, $1 million home, children going to private school, spending 100,000 a year on schooling and all. You're always looking for areas where you could make it more optimal, efficient workflow and all. So that is good. What I'll do, I will save the recording. I'll send a copy to you. I'll send a copy to our student also. And I welcome you next time. अगर आप real estate पे भी ज्ञान दे दे हमें, so उससे क्या होगा sir? We will understand. Now one is, and I have, by the way, some students in who are brokers or real estate agents. Some of them may flip, some of them may not flip. तो वो रियल एस्टेट का आपका नॉलेज 1 आवर का वो ज्यादा इंटरेक्टिव होगा, बिकॉज वी हैव सम ऑफ देम हु आर रियल एस्टेट एजेंट आल्सो. ठीक है, so I think is, and they are learning business analysis, and so that they can have a double income, because real estate showing is now virtual or weekend showing, है ना. तो weekdays में they will work as a business analyst, and weekends में they will work as a broker. So they may also learn something about flip. They may also have some ideas which you and I can also learn, and collectively more smart is what my suggestion would be.
Thank you so much, Debhai. And one thing I just wanted to share right now, you see all of us this on a screen. This is a national US debt right now. You see the red numbers growing like crazy.
Yeah, that's
so
29, that's almost 30 trillion.
Yeah, so a lot of people ask me, is the market going to collapse? Why is the rates going to go up? So maybe in a second meeting, we can talk about this and think about this. And if you see the history of US debt, the US debt is growing, but US debt interest is not growing. And US debt interest is something we have to pay back. So how come US government is able to keep the US interest debt? It's technically, let's say I borrow money and I have to pay back, and I'm the one who has to decide what interest I need to pay on my debt. Luckily, the country where we all are right now living, that country has a Godfather blessing to decide on its own how much interest they want to pay on the debt they have. The debt is growing, but the interest is decreasing. And that's why we are keeping the US debt interest low. But that's creating a inflation. So that's number one thing. Second thing is, you check this article about provisional income, okay? You see this one? Provisional income is the only blessing where the life insurance is not part of it. You see, provisional income will not be impact your social security benefits are Roth IRA, life insurance, and HECM. That's something we can talk later. But so if you have a life insurance income, that's not part of your assets. Otherwise, you have to pay provisional income tax, and that's how you lose your social security. Third thing, long-term care. Remember I talked about someone turning age 65 today has almost 70% chance of needing some type of long-term care services and supports in the remaining years. Women need care 3.7 years longer than men, because ladies live 10 years usually longer than men. So it's another story, because unfortunately men who are running around, they have to make sure they protect their families, right? Otherwise, if that's not happening, then, the ladies on their own. But anyway, so these are the 3 topics. I think that's something is like a lot of information, but maybe next time we can talk about it. Thank you, Debhai. Thank you so much. Sayonara, bye, friends. And anyone has any questions, please, stay in touch.
Yeah, I will invite you either on Tuesdays or Thursdays session. तो हर हफ्ते में एक session करते रहेंगे, Anil, because that's going to help my IT folks also, because many of them need that domain knowledge, है ना. तो real estate का अगले if Tuesday को अगर शायद discuss कर ले, so we can discuss real estate, and then maybe Thursday, by then these people would have summarized it and watched it few times. Correct. And they will come with some questions and answers, and we'll make it not one-sided, we'll make it more interactive, or maybe you can slice and dice this कि term life के ऊपर आप आधा घंटे का ज्ञान दो, product के ऊपर you give half an hour ज्ञान, IUL के ऊपर you give half an hour ज्ञान, then you can do comparative कि what is term life, what is full product, what is IVL, है ना. इससे पहले people should understand कि what is the difference, term life क्या होता है, what are the advantages, what are the disadvantages, full product and IVL, floor क्या होता है, ceiling क्या होता है ना. Floor meaning cannot lose below 0%, ceiling meaning you cannot earn about 10%, 12%. Then the thing is, can I earn this, that? तो वो क्या होगा कि we'll get a different perspective, because I think there are about 20 some people of us, so they can make it more interactive, and we can go from there, sir. ठीक है ना. ये हम 2 से 3 बजे every Tuesday, Thursday we do it 2 to 3. Yes. So thank you for your generous time, and thank you team for joining in. I will be sending this recorded copy to each one of you as well as to Anil, and I appreciate all of your time. Have a great afternoon. Thank you.